Meantime, both Dollar General and Dollar Tree are going to report earnings this week. Those names are also up more than 20% on the year in what's been a kind of tough market. According to Placer AI, that does location analytics, overall visits to the dollar stores have actually been on the rise again as consumers are looking to get more bang for their buck amid all this macro uncertainty and some inflation. And Campbell's Soup sharing a similar fact in their earnings report today. They say the number of people cooking at home is at its highest level since the pandemic. So what does all of this say about the consumer and what to do with these stocks? Let's ask Victoria Greene, G-Squared Private Wealth CIO and a CNBC contributor. Victoria, are you cooking at home a lot?
I am. I'm not going to lie, though. I am a pretty good user of DoorDash. I'm a little lazy on that front sometimes.
Yeah. So what would you do? The dollar stores, breakout stocks of the 2010s, tougher time lately, good year so far. What do you think?
I like the dollar stores. I think consumers are looking for value. And if you look at them, they bottomed out around December and they've had a great run up this year. Dollar General up about 28%, Dollar Tree up 19%. It's because consumers are looking for value. Call it almost the Walmart effect. They want somewhere they feel like they're getting values and discounts. And yes, if prices go up slightly, they're going to go up everywhere and they're still feeling like they're getting a value in these stores. So you're seeing foot traffic go up. You're seeing both stores aggressively right-size themselves. Dollar Tree spun off Family Dollar. Dollar General's closed about 90 stores where they're putting stores. They're using so much more analytics to get more bang for their buck, as well as Dollar General is like 80% consumables. So they're a little insulated on spending, a little less on the discretionary front. And it just shows more and more consumers are looking for their value shopping.
So maybe an easier call for you on some exposure to the dollar stores. What about for the consumer staples trade, like the Campbell's Soup, some of the other names in that group? Also, they were sold off for MAHA reasons lately.
Yeah, but Maha, call it the whole health effect. I just can't touch Campbell's here. If you look at their chart, it's a terrible looking chart. They're not in an uptrend. They're almost in a downtrend for 5 years. They really have to find what the consumers want. And they do have some bright spots. Now, please don't shoot me. I'm not a New Yorker, but the Rouse brand, Rao's, how do I pronounce
Rao's,
that?
love it.
Rao's. Yes, that one was a bright spot and about for them and the Italian food, but it's the snacking, which is 43%. I'm not touching them, not Kraft. Pepsi struggled with their snacking division. It is a universal. The American public is pivoting how they are spending their money, and they are not spending it on salty snacks right now, which to me, as a lover of the goldfish cracker, I'm a little surprised. But you look around, I really do. They are absolutely
Is it a weight loss
snack.
drug effect? I mean, why this sudden drop off in snacking?
I think it's weight loss. Absolutely. GLP-1 is coming into it. I think you also have this 5-year shift a little bit more healthy. People are reading labels again. And this is a normal cycle. You remember the 90s and 2000s where everything had to be low fat or fat free and we didn't care about sugar. Now, all of a sudden, everything needs to be a little bit more healthy and people care about what's on the ingredients list. They care about what they're putting in their body. You're seeing so much more towards organic and fresh and nutrient. And maybe it's the CrossFit effect, the GLP-1 effect, whatever it is. We are starting to read labels and care a bit more, which is a little tough for all of these snack makers. And it's then not just Campbell's that's struggling. You look across the staples, and it's really hard in the snack divisions.
Right. I'm surprised to see the stocks kind of trading up back towards last year's highs. But maybe a final comment on that and consumer discretionary. So when you hear a data point, as people do, about what Campbell's is saying today, are they supposed to take away from it that the consumer is weakening or no?
I think the consumer is actually relatively healthy. I think if you look at consumer income, PCE up 0.8%. Yes, spending's changing. The consumer is just being very deliberate on what they are spending their money on, and that is hurting some legacy brands. It's no longer just money to flow around like 2020, 2021. They are still spending. It is a little bit more deliberate, and they are looking for value. So everybody needs to figure out a way to show their value to the consumer to get them to continue to spend, and they're going to have to control their costs, their marketing costs. They're going to have to control what they're doing on the inflation and pricing. Right. And that's another thing on the Campbell's, just to bring up the whole aluminum tariffs could hit them pretty hard with all the canned goods they have. And they said it was only about a 2 to 3 cent EPS impact with the existing tariffs, but 50% on aluminum and steel. That's also difficult for snacks, especially in the canned goods. So I just don't like that sector there. I think you want to go for value. Your Costco, your Walmart, your Dollar Trees, go with what's winning in this sector. And I just think it's too early to bottom feed on some of these staples names.